made it through the election cycle. We're now into November. Question is, what's our market doing? Has anything changed since the election? Because so many people were going to wait until the election to make some decisions on the real estate market. Mike Rolowitz here with the 904 Home Guide team with Real Broker in Jacksonville Beach. Time for our monthly market update. We're going to be looking at data from October of 24 versus September of 24, and then we'll look at some year over year versus October of 2023. As always, we're focusing on Duval, St. Johns County single family homes in our region. Going to run through the numbers real fast, and then we're going to do a little bit of a deeper dive on what's been happening with inventory, which I think has been the biggest story of the market here in Northeast Florida in 2024. So looking at price first, our median sales price actually rose again, which is counter to our typical fall seasonal pattern. So we bounced back 5% from this time last year and 2.1% from last month. So our median price point sat at $408,500. Closed sales down fractionally, just over 1,100 homes sold in the month of October. Our days on market, that continues to climb, up 19%, both from last month and last year, sitting at 50 days. So homes are taking about 50 days to sell. What we're finding within that 50 days, the ones that are selling in days 1 through 30 are commanding the highest list to sold ratio at about 97%. Those that sit beyond 30, 60, 90 days, they're seeing offers and selling more in the low 90s as a percent of the original list price. New listings up 12% from last month and up 35% from last year. So there were 2,300 new homes that came on the market. Our active inventory is up 74% from this time last year at about 5,800 units, 5,875. That's up only 100 units from last month, from where we sat the end of September. So about a 12% increase there. How does that translate to our month supply of inventory, that absorption rate that really determines who's in charge of the market? So we're at 5.1 months of inventory, which is right in the middle of a balanced market, which is 4 to 6 months, which typically means buyers and sellers are about at even footing in terms of negotiating power. That was 4.9 months last month, so not a huge rise. What I do want to talk about, and I'll put some graphics up here, is just what's happened with our active listings, the inventory in our market. So I had our friend Alex at the Market Distillery look at a couple points in time, a couple years. We've shared some 20-year trends with you over time. I said, what did it look like in the crash of 2008? What was inventory? What did it do seasonally? And it actually, you'll see it declined over the course of 2008 because we had this huge run up to over almost 19,000 listings that you'll see on this graph that shows really how many active listings have been in our market. Now, notice that's also a zoom out. That's looking at the entire 6-county region of our MLS. But seasonally, we typically rise in inventory through the spring months, flatten out in the summer where it peaks, and then it usually trails off a little bit in the fall months as fewer people are listing their homes and homes get absorbed into the market. Well, this year on an index basis, you'll see we're 28% above where we typically are seasonally on active listings. And there's also a graph we'll put up here that shows the absolute number of listings. And you'll see it's a much steeper, that orange line is a little steeper than usual. But if we look, we're still around where we should be historically. Obviously, if you look at 2021, when in the month of September, we had 5,000 listings. We had 9,500 this year. So obviously things have changed a lot since 2021. However, seasonally, that 20-year average is about a little over 10,000 homes. So we're close to that. We're nowhere near the 16,000 homes that we had in 2008 when the market crashed. And again, those that are waiting for the crash, I think are going to be waiting a long time. because we're in a very healthy, balanced market. The demographics, the inflow, migration that Jacksonville is still seeing is keeping our market very healthy. That's why that median price point continues to climb, even as interest rates, though the Fed cut rates, have gone up almost 100 basis points. We almost erased all the lowering, I guess you could say, the reduction we had in mortgage rates leading up to the Fed rate cut, because that was getting baked into that 10-year treasury. So after the election, stock market booms, people flee bonds, bond yields have to go up, mortgage rates go up. So what's good for the stock market oftentimes is not great for the mortgage market. We're expecting to see those rates come down closer to 6 again towards end of this year or early next. What we've seen on the ground since the election, definitely an uptick. I think people were just paralyzed for a period of time. Now that there's certainty, we know where we're going. The market, people are getting back in. So that's healthy to see. So it'll be interesting to see next month if that month's supply of inventory, if that doesn't tick down just a little bit, because we're starting to see increased activity on some of our listings that have been on the market for a little while. And we've also seen a couple of our listings go under contract in the first weekend over this past month. So hope this was valuable to you. Be sure to like and subscribe if it was, and we'll see you next month to break down all things November.